Hi everyone, welcome back. This is A Plus Academic Resource Center. Okay, so let's get down to business. So we're looking at taxation today. Okay, all right. So we have done some introduction on our TikTok page. Okay, we have done an introduction there. The link to our TikTok page, I'll drop them in the description section. Okay, all right. So we'll talk about cessation of business. Okay, now when we talk about cessation of business, what do we mean? We're just trying to say how are the profits of a business assessed for tax purposes when a business stops operation. If I may start a business at any time, and I may say, okay, I don't want to continue business due to one reason or the other. It can be economic or any other reason. Okay, I can say, okay, I want to stop operation. Maybe I can give a date or immediately. Basically, when we say cessation of business, it has to do with bringing a business operation to a stop, to stop operating. Okay, and section 25 of the personal income tax gave some rules that guides the 2 years period to cessation of business. It's also similar to those in section 29 subsection 4 of the company income tax. Okay, it gives the rules there governing cessation of business for the last 2 years to cessation of business. Now these are the rules. Okay, just like I said in the TikTok page, I'll post them on the screen so that you see them and go through them. However, I'm going to explain them to you, the rules. Okay, now number one, we have what we call the ultimate year. The ultimate year is the year the business stops operation, the year in which this business ceases operation. If I stop operation 1st of June 2009, okay, 2009 there is the year in which I ceased operation. The year my business ceased operation, and that year is known as the ultimate year. An assessment is done from 1st of January that year. Let's use 2009 as an example. 1st of January, okay, let's say, 2009. So the assessment period for that year is 1st of January 2009, okay, to the date of cessation. Okay, let's say I ceased operation June 30th June 2009. Okay, for instance, I'm giving an example now. Okay, so the assessment period will be 1st of January 2009 to 30th of June 2009. So if I ceased operation in 2010, December 1st, the period of assessment, don't forget, December 1st, let's say 2010. 2010 there is the ultimate year. So the basis period would be 1st of January 2010 to 1st of December 2010. So basically, ultimate year is the day, the basis period is 1st of that month of cessation, that month of the year of cessation, to the period exactly of the year of cessation. We're going to do some examples you understand. Then number two, we have what we call the penultimate year. Penultimate year. Okay? Penultimate year is the year preceding the year of cessation. Sorry, not assessment. Penultimate year is the year preceding. When we say preceding, the year before the year of what? Cessation. If we cease operation in 2009, what is our penultimate year? 2008. If we cease operation 2012, what is our penultimate year? 2011. Are you with me? When we cease operation 2020, penultimate year is 2019. Are we together? So the basis period for this one is the basis period for this one will be done on two bases for penultimate year. It will be done based on actual basis and what normal basis. Normal basis here is still known as a preceding year basis. Don't forget, actual basis, normal basis, we have done it we have treated some examples that helps us understand these two bases when we did commencement of a business. I'm going to post the link to that class on the description section so that you can see it and go through it, okay, to refresh your memory. So for penultimate, it's going to be on two bases, actual basis and normal basis. Don't forget, actual basis is 1st of January to 31st December of that year. Okay, if our penultimate is 2011, so actual basis will be 1st of January 2011 to 31st of December 2011. Okay, while the normal basis preceding year basis, if our penultimate is 2011, then preceding year basis is going to be 2010. Okay, so when you compute for these two bases, the one that is higher that's the rule. You accept whichever one produces the higher assessable income, because that will produce the higher tax. Then number three, the right of election is vested with the tax authority, not the taxpayer. Now, when we did cessation, commencement of business, the right of election was vested on the taxpayer. But in this case now, the right of election is vested on the taxpayer. Okay, the tax authority. Sorry about that. Tax authority. Okay, so when you compete for penultimate, whichever one produces the higher assessable income will definitely produce a higher tax. So the taxpayer have the right of election to pick this. So that is the rule governing penultimate. The higher assessable profit, either actual or normal, is picked. The higher one that produces the higher assessable income is picked. Okay, then the last one is either the actual or the basis, or the cessation of business. The rules governing cessation of business helps in decision making. Okay, because our emphasis is majorly on this. That's the emphasis on cessation of business. The penultimate. That's the crux of the matter. The penultimate. So the penultimate helps in decision making. That is to say, it will help the taxpayer to know whether to continue or to stop business. If the taxpayer see that if he stops business in 2011, it's going to make him pay higher tax, he can decide to continue business to maybe further add some months extra or some years extra so that his tax will reduce. But now, remember, right of election is not vested on the taxpayer but the tax authority. However, he has a decision to choose whether to close business at that period or to continue business. Okay? Sorry, excuse me. So this is about the explanation of cessation of business. So we are going to treat an example now to further help our understanding. Are you ready? Okay, so now let's treat a question and see how we'll help our understanding on this subject matter. There are two questions I told you before. I'm going to solve the first one, then you try the second one. Okay? And if you try the second one, go to the comment section of our Facebook page and take a screenshot or something. Just snap it and paste it there. I will see it and assess it. Okay? Alright, so let's go. Number one question says, ABC Limited has been in operation for many years in Nigeria, but from 2000, it has been facing chronic management problems, which accumulated into serious financial distress in 2003. Okay? Now, as a result, the business finally ceased operation on 30th of June 2004. What is the ultimate year here? What is the penultimate year? We're going to find out. The operating result as recorded in the account of the business for some years as stated as follows. Okay? Adjusted profit for the year ended 31st of May 2001, 450K, and all that. Okay? Now, how do you solve this question? There are three things you need to do first before you give a solution to this problem. Number one, you have to recognize your ultimate year, which is the year the business ceases to operate. Number two, you have to recognize your penultimate year. The penultimate year is the year preceding or the year before the year of cessation. Then lastly, you have to check or ascertain the accounting period. Every business makes up accounts every 12 months. It mustn't be January to December. It can be from one month, any other month to any other month. It mustn't be January to December. So for this one, we'll find out which what is the accounting period of this business. Okay. Now, for ultimate year, let's find the penultimate year first. Oh, sorry, let's find the ultimate year first. It will help us to know the penultimate year. Now, the question I say, as a result, the business finally ceased operation on 30th June 2004. Our ultimate year here is 2004. Ultimate year, 2004. Penultimate year, therefore, will now be 2003. Are we together? Are we together? Okay. Then, lastly, I told you to ascertain or recognize the accounting period. Now, from the question here, the accounting period here is May every year. That is to say the company makes up accounts May of every year. Okay? If the company makes up accounts May of every year, that is, it starts from June of every year. So from June to May is 12 months, which is 1 year. Remember I told you, a company is not under obligation to make up accounts December of every year. It can be any period, but must be 12 months. That is 1 year, okay? So this company makes up accounts May of every year. So that is to say it starts from June to May. So June to May is 12 months. Are we ready? Okay, so let's get down to business. So our penultimate year is 2000 and what? 2003. So let's start our computation. Year of assessment, basis period, and assessable profit. Okay? I hope we can all see the board. Okay? So let's go down back to our question. So if our ultimate year is 2004, penultimate year is 2003. Okay? So that is to say our computation starts from 2002. I don't know what is wrong with all these markers. These are new markers. Okay? Are we together? So 2002. So we'll have 2002. So we have 31st of period to 31st of May 2001. So 2002, the preceding year basis here will be 1st of June 2000 to 31st of May 2001. 1st of June 2000 to 31st of May 2001. Okay? And it's how much? We have that period there, 31st of May 2001, which is 450K. Okay? Are we clear on this? Okay? Remember, once you ascertain your penultimate year, you ascertain your ultimate year, then the year before the penultimate year, you can start your computation from there. Okay? So, for 2002, basis period is 1st of June 2000 to 31st of May 2001. This is 12 months. And we have information on that, which is 450,000. Check your question, you will see it. Okay? Then 2003 is our penultimate year. Okay? 2003. Penultimate year. So, penultimate year. Penultimate year. Okay? So remember I told you penultimate year, you will compute for actual basis, compute for preceding year basis. Whichever one produces the higher tax, that is the one you will accept or the one you will work with. Okay? Now, for actual basis, remember I told you actual basis is 1st of January of that year to 31st of December of that same year. So our penultimate year is 2003. So we are computing for 1st of January 2003 for actual. We have 1st of January 2003 to 31st of December 2003. Okay? So we have, do we have any information on that? Okay, from our question here, we have that period to 31st of May 2002. 1st of January 2003. Okay? And we have 31st of May 2002. That is to say, we have some information here in 2002. Okay? So here we'll have, let me do it in this manner. Period to 31st of May 2002. Now, from 1st of January 2003 to 31st December 2003. So, from our question here, we have information on that. We have 2003, we have, 31st of June 2003. So January, March, April, May, June. So we have 5 over 12 times 200K. Sorry, I'm using K because of I don't want the board to be too full. Plus, then to make up this 5, we have 7 months left. May, June, July, August, September, October, November, December. Remember, 31st December, we have 7 months, which is 7 over 12 times 2003, we have 150K. Okay? So we'll use our calculator now to know. So we have 5 over 12 5 divided by 12, okay, times 200,000. 83,333, okay? So we have 83,333, okay? Plus 7 divided by 12, okay, equal to times 150,000. We have 87,500. 87,500 naira. Okay, let's add these two together. Plus 83,333. We have 170 equal to 170,833. Okay. All right, are we together? This is for penultimate year, for actual basis. Now let's do for the normal basis. Normal basis. Normal basis is preceding year basis. 2003. So we'll have 1st of June 2001 to 31st of May 2002. Are we together? Normal basis is same thing as preceding year basis, okay? So preceding year basis is the year before the year of assessment. So our penultimate year is 2003. Therefore, our normal basis will be 1st of June 2001 to 31st of March 2002. The 12 months before the year of assessment. The first 12 months immediately before the year of assessment. That is this. So let's see if we have any information on this. So 1st of June, period to 31st of May 2002. Let's check our question if we have, okay, period to 31st of May 2002. Yes, we have a 350,000. 350,000. Is in your question there? So 350,000. Okay? So between 170 and 350, which one is higher? 170,833 is higher. So the actual basis is higher. So push it down here. 170,833. Okay? Hello, are we together? Remember the rule. You choose the assessments that will produce the higher profits and the higher tax, which is this one. Then lastly, we have 2004, which is our ultimate year. Ultimate year. Okay? Ultimate year. So now, ultimate year, the rule is 1st of January to 31st of December, 1st of January to the year or the period of cessation. So ultimate year is 2004. So it's going to be 1st of January 2004 to where did the business stop? 30th of June 2004. Okay? So let's see. Do we have any information on that? Do we have any information on that? Let's see. Okay? So here we have period that is 30th of June 2004, which is 20,000. Okay? So since, are we together? Check your question, you will say it. Period to 30th of June 2004, which is 20,000. So from 1st of, and our concern here is 1st of January to 30th of June 2004. Are we together? So now we will now have 31st of May, 31st period to 31st of May 2004 has some information of this. So it's going to be May, then June, July, August, September, October, okay, November, December, okay? Are we together? So we have 7 over, we have 1, 2, 3, 4, 5. Are we together? So we'll have May, which is 5 over 12 times 150K, okay, plus 20,000, okay? Because our question here says 31st period to 31st May 2004 is 150,000. Okay, so January, February, March, April, May, which is 5 months. So it will be 5 over 12 times 150K plus 30th period to 30th of June 2004 is just 1 month and it's 20,000. So you add this amount here and this amount to give you 5 over 12 times 150. Do we have any information on that? Okay, let's get it. 5 over 12. 5 divided by 12. 5 divided by 12, okay, times 150K, which is 62,500, okay? 62,500 plus 20,000. 20,000, which is 82,500 naira. 82,500. Okay? So this is it. Our penultimate year, our normal year, ultimate year, penultimate year, okay? Under the penultimate year, the actual basis gave us the higher assessable profit. Then the normal year, that is the the ultimate year, which is the year of cessation. We are able to compute this. If you don't understand, if you have any question, please use the comment section. I'll be more than glad to answer you. Okay? All right. So this is so the second one, you attempt it yourself. Attempt it. I didn't say you must get it correctly. Okay? Just attempt it. Whatever you don't understand, you can send me a DM. However you want to do it, you can use the chats, the comment section. You can also reach us. Okay? We are here to assist you. All right? Okay. We're going to stop the class at this point. Please subscribe if you have not done so. Invite people, share this video so that it will get to people who actually need it. We are here to solve your academic problem as regards to management and social science courses. Okay? Thank you for staying to the end of the class. See you in the next class.